everybody. Hey, thanks for joining us today for our webinar, The Overlooked Risk of Cyber Threats and Labor Law Violations. We're excited to bring you this. We do try to do one every quarter. I've got Mark Moseley and Rhett Thomas here from Scott Insurance. Mark has been in the business for 30 years plus. You know, he's an Auburn grad, so don't hold that against him. Rhett's been in the business for over a decade as well too, very well versed in the threats of cybersecurity and all the different things that come along with those. So we're looking forward to bringing this to you. You know, afterwards, we will provide the slides and a recording of the call as well too. If you have questions, please drop them in the Q&A. And then at the end, we'll make sure we get to as many as possible. So without further ado, Mark Moseley and Rhett Thomas from Scott Insurance.
And I think, Rhett, you're starting us off this morning, right?
Yeah, thanks, Tim. And thank you to all the team at Dominion for letting us the opportunity to speak to you. I'm looking forward to hopefully educating you a little bit and teaching something new. And appreciate you guys all joining. So goal today for me, like Tim said, I've got a background in cyber, specifically cyber insurance, and hopefully just teach you a little bit more about some of the trends and common threats that we're seeing in the SMB space. It's an emerging kind of thing over the past 5 to 10 years, especially as all of our industries have become a little bit more digital. And sometimes it's overlooked, especially when you've got a million different things you're trying to manage. So hopefully providing a little bit of light as to some of the threats you guys are facing or could potentially face, as well as some things that you can do to kind of evaluate those and create an infrastructure that could hopefully prevent some of the attacks and some of the bad actors from getting into your network and costing you money. So when you're thinking about cyber threats in general, there's really 3 buckets that you can look at. The first big one that's making the waves in the news, this is going to be ransomware. You can see the big bubble there. So take a step back. This chart is from Net Diligence, who analyzes claims from 40 different carriers that submit claims to them. So this has got the best data in the industry. This report just came out from last year's data. And what this does is provide you a little plot chart of where the claims are coming from, from an attack type, as well as the dollars spent on those claims. So you can see ransomware, that's going to be the biggest bucket. That's going to be essentially when a threat actor gets into your system, whether that be through stealing a password or just hacking into the network, breaking a firewall, and essentially they're just going to shut down your network and discontinue your operations. They might put a flashing skull with crossbones on the screen and say you owe us $5 million, and then we'll lock your system. That's essentially the name of ransomware. They're not necessarily after any of your data. They threaten that, but really the biggest cost driver here is the downtime to the business, and they know that. And hopefully, creating urgency is the goal there. The other prominent threat to SMBs would be the business email compromise and kind of the funds transfer stuff. So I like to lump all of those together. So you see wire transfer fraud, theft of money, and business email compromise. Those all go into that cyber crime bucket. And essentially that's where there's malicious intent to steal money, and that's the name of the game. So whether that be faking invoices or sending emails that look like it's your CFO or CFO, just trying to trick you or coerce you into sending money where it's not supposed to be. The one highlighting business email compromise, I think is important. This has been an emerging trend over the past probably 2 to 3 years, and it's kind of gotten broken off to the side outside of the social engineering, the traditional, just sending weird emails or text messages or phone calls. Business email compromise is a unique one where the hacker is going to get into your system, specifically into your email system, whichever one you're using, Gmail, Outlook, and essentially just hang out there, learn who you're communicating with, learn kind of how you're speaking with your vendors, how you're talking to them, when you're transferring money, what that looks like, and essentially just grab a ton of data on your communication style and how you guys are doing your business. and then they'll pick an opportunity where they see a dollar amount that is intriguing to them and intercept emails coming in or out, and change the information on those emails. So whether that's a banking information, where the wire should go, phone numbers, credit card, dollar amounts, they will intercept the email before it reaches its end destination, change that information so the money doesn't go where it's intended to, it goes to the threat actor. And what's really kind of scary about this is you can have the best procedures in place, whether that be callback provisions, dual authentication, specific people transferring money. The workaround is when they're changing phone numbers, the email looks, it is coming from your system. There's not really much you can do because you're going by the book. So this is a very critical one where some controls can come into place that more insurers are looking to implement to try and prevent this from happening, because it's not like your traditional, you see a funny email from xyz@gmail.com posing to be your CFO. Everything looks real. A real story on this: we had a contractor client not too long ago, sent money to a subcontractor of theirs, and I think the total was like $450,000. Job was supposed to start, job didn't start because the contractor didn't get paid. They started asking questions. Well, hey, we sent that to you. Turns out the contractor, the sub, was not getting any of the email communication. They were communicating directly with a threat actor overseas, even talking on the phone with them as the money was getting exchanged. Ended up being about a $450,000 loss. Had no idea. Forensics indicated that threat actor had been in their system for about 60 days prior to. So that opens up a whole nother issues. But the main thing is their work's not getting done, and it cost them $450,000. There's also some reputation there as well with their subcontractors and GCs on why is this not getting done, and trying to explain that. The last bucket would be the hacking incidents. SMBs can face this if you're in industries with sensitive data. Healthcare comes to mind, but not necessarily something that's very prevalent. This is kind of operating the same as ransomware. However, the hacking, they're not going to shut your system down. They're just going to steal the data that they want, whether that be healthcare records, credit card numbers, social security numbers, addresses, things that people want to buy, passwords, and they're going to sell those on the dark web. So they're just going to take it, sell it on the dark web, and be good with it. Medical records is another one. So this is really affecting the large Fortune 100 organizations, United Healthcare, the Bank of America's, the Lowe's Home Improvements of the world. Not necessarily something that is super prevalent in the SMB, but it does exist. And then, a claim example for ransomware, while we're on there, Change Healthcare was one that happened last year. Colonial Pipeline back in 2021. You could see the disruption that those caused. Colonial Pipeline specifically, they couldn't ship gas, down the East Coast. Change Healthcare was more recently ended up paying about $22 million in ransom, I believe, was the final payment on that. And kind of what was alarming about that one was that was a healthcare claims software system, and about half of American population's healthcare data was affected by that breach. So they managed United Healthcare, as well as a bunch of other healthcare organizations' claims data. And so all of our healthcare records that were a part of that breach were exposed in that data breach, and they still had to pay that $22 million ransom. And that's on top of a class action lawsuit that I'm assuming is going to be coming within the next 6 to 12 months from some attorneys that want to do a quick money grab for our data being exfiltrated. So again, I think if you're looking at this, from your perspective, ransomware and then any of the money transferring is going to be the biggest threats to you. A common misconception.
Rhett, I have a question. Is there a common definition? I think SME, SMB, that refers to small and medium enterprise or small and medium businesses. Am I correct? For that data, we don't know our audience today, but for this data, what would be a more or less common definition of a small and medium enterprise?
Yeah, so Net Diligence looks at from $0 in revenue up to hundreds of billions. They define SMB as under 2 million in revenue. I'll show the next chart, which kind of breaks out their specific ones, and you'll see they call it nano revenue, which is under 50 million, is the overwhelming majority of the population from where this data is coming from.
Okay.
But yeah, this is all encompassing $2 billion in revenue and below. So yeah, kind of building right off that, a common misconception among the small to mid-sized enterprises is, my business is too small to be cyber attacked. Why would they want anything to do with me? And you can see this chart here, the same chart from this, or same data source. The first line is the nano revenue. So what they defined as under 50 million in revenue. And overwhelmingly, you can see the claims are being generated from this band. There is more businesses that are encompassing in that, but it's over a majority of all claims are coming from this specific number. And what I like about this graph is you can see some of the average claim sizes and the maximum. So, those ransomware claims, those tend to be your high dollar, your high ticket items. $1 million is about the average of that for just the ransom payment. Your lost income can go into the couple $100,000. So all in, you're looking at about 1.5 million. On the funds transfer stuff, about 150,000 is the average. So when you're looking across the board here, you can see minimum claims about $1,000, the maximum. So I'm assuming that's going to be more of that ransom, where $10.4 million was the max claim that was pulled from this claims data. I don't know what that was. I assume it would be a ransomware, maybe a higher hazard manufacturer type operation where they were down for a little bit. But that's stuff like that dollar amount is crippling to a business. And I think it's very alarming to see that. And unfortunately, the threat actors do not care. Usually they're foreign entities with, they're just shotgunning plays. They do not mind putting businesses out of business when they start going after them. And it's still, average is roughly 150,000 for the claims in that nano revenue band. And a lot of these, again, are those funds transfer. So it's the 50, 100, 150, $200,000 shots. Still significant impacts to the business, would definitely impact the margins if that were to happen for you. And the reason this is a misconception, SMBs are described by cyber threat actors as target rich but cyber poor, and essentially that means you've got all the makings from a data perspective, from the vulnerability perspective of a large organization, right? You've got customer data, you've got credit card numbers, employee information, you've got all this, housed on your network, but your controls aren't sophisticated as, the Fortune 100 companies, right? So they can spend a ton of time and manpower trying to hack into a major organization like a Bank of America, and still might not get into it. Yeah, the dollar amount might be jarring and in the tens of 20s of millions of dollars, but they found that they are more successful being able to attack the smaller organizations because they are able to get in the doors a little bit easier, which is very interesting. And it's gotten a lot easier with AI as well. Some of the tools they're able to do are one that look a lot more real, and they're able to spread them out a lot quicker and more efficiently as well. So concerning on both fronts from your standpoint as a business owner in the small to mid-sized space. So kind of scared you a little bit, and definitely wasn't the intention. But when you look at kind of what the threats are, we like to coach our clients. What can you do to prevent those threats? And it's the same as any other exposure you've got in your business. Work comp or property, implementing the right controls is really the first step, getting your arms around what's going on, and then kind of building a game plan from there. So the first step for us when we're looking at working with our clients on their cyber exposure is just identifying any of the business exposures and some of the vulnerabilities. So do you have sensitive data? Are there limited resources to deploy for security controls? The human element, are your employees trained? Are you transferring money all the time? What does that process look like? One that we are always talking with our customers on is what's your reliance on online operations or vendors that are servicing you from a technology perspective? If you're a restaurant and toast goes down, what happens, right? So thinking about those things more long-term and kind of bigger picture is something we love to work with our clients on, because it's not the everyday thing that you're thinking of. And usually once you start peeling back the layers of the onion, you'll find that there's some critical vulnerabilities that you just necessarily weren't thinking of, where you can get your arms around controls and think about a little bit better, and do some things differently that you weren't otherwise doing to protect the business and the long-term health of the business. So once we've got our arms around controls or the vulnerabilities and the exposures, we start to look at implementing controls. The first place we start always is going to be with employee training. 80% of cyber attacks are due to an employee clicking a bad link or getting talked to over the phone by a threat actor thinking it's the CFO of the organization. So that's where we start. From there, there's specific security controls that you can look for. MFA has gotten very popular. That's been proven to attack or prevent attacks. That's like Face ID on your phone, your iPhone. That's an example of MFA, or the text message that you get when you click in your password to log into work. Backups is another one. So this has gotten a lot more popular along with EDR for the ransomware exposure. So if you're backing up your data on a pretty regular cadence, and that cyber attacker comes in and says, hey, we've got your data, we've stolen it all. Well, if you've got it backed up and you've got procedures in place for that, then hey, no harm, no foul. You can kind of negotiate with a stronger footing and more leverage when you're talking with those threat actors. And then once we've got our arms around controls, that's when we would look to purchase a cyber insurance policy. And kind of work in that same order. So insurance is intended to be, the stopgap. It's not the first part and where you want to start. But if all these things are to fail, the insurance policy would be there to protect you in the event of a loss. This diagram on the right is the NIST cybersecurity framework. I think it just does a good job of visually kind of explaining how you should look at your security posture and how you want to organize that. So again, the govern is the kind of let's figure out what's going on. And then going around, starting with the blue all the way to the green, just identify, protect, detect, respond, and recover. So in the event of a loss, those are the steps that you would want to take to help make sure that it's moving as smoothly as possible. And lastly, kind of standalone cyber insurance, just want to kind of chat through what that looks like as well. I highlighted the key coverages here. If you're doing an audit on your own policy, these are what we specifically look for right off the bat. The policy is broken down where it's first party, third party, and then endorsements. So first party, the easiest way to think about that is it's kind of like your property coverage. So this is going to cover any business interruption. Contingent business interruption would be loss if you lose income due to that example I gave earlier of toast going down, and you lost revenue from that. The contingent business interruption would be the coverage that picks up that. System failure or really any type of coverage where it's affecting you personally as the business. So whether that be forensic investigations, figuring out how to get your network back up, like anything technical that's only affecting you that would be covered in the first party. The third party is going to be the liability part of the coverage. So if you have customers' data that's sold on the dark web and they sue you, or a class action suit is brought against you, this is where that coverage would pick up. A lot of regulatory fines. There's some legislation that's in place in Europe that a lot of U.S. organizations have adopted. That's becoming more popular in the U.S. as well from our own regulators. So if you've got fines coming from that after an incident, things like that would be covered in the third party. Limits, again, benchmarking limits is something that we're really keen on doing for our clients and prospective clients. In that standalone cyber insurance market, you can get up to $10 million. The right-hand column is like an endorsement. So if you've got, we've got cyber insurance that's endorsed to our main policy, usually those limits are very low and coverage is pretty limited. As you can see, the average claims, the average for the small to mid-sized business in that nano bucket that Net Diligence defined was $150,000. $100,000 limit isn't going to get you very far. So in the standalone market, we're able to benchmark you and make sure that you've got adequate coverage for the business exposures. And then additional coverages. So you've got things, social engineering, cybercrime, which is that second biggest exposure to the SMB space outside of ransomware. That's where this would be housed. You've got other pretty unique, specific endorsements. Each carrier has got their own little portfolio that they like to deploy. So those could be bricking coverage, which is replacing any bad equipment after an attack. Some have industry specific vertical, construction, this bid endorsements. So things like that would be accessed in there. That's it from the cyber perspective.
Okay. And I think we may have questions at the end, is what I understand. So we'll save and open that up if anybody has any questions. Thank you, Rhett. Appreciate that. I think I'm going to get you to continue to drive the slides on the way through. And am I correct, Tim? We'll do questions and answers at the end. Is that right?
That's correct. Yep.
Yep. Good. Well, we'll transition over to employment practices liability. And just by way of introduction, of course, we realize that on the phone today, we likely have folks in human resources, may have people that are in the legal profession, even if you're working within a private company or ownership. So as we're speaking to you all, there may be areas here where you're a better subject matter expert on something of HR or legal. Our references and my references today in that realm are mostly to set it up for how it is that employment practices liability insurance interacts with that. Of course, we're working with the human resource professionals and the attorneys when it comes to the claims. But wanted to just make a couple of comments, and there's really, if we go to that first slide, Rhett, on understanding, one more. Yeah, understanding EPL and its impact. Of course, employment practices liability primarily has to do with allegations having to do with federal labor law. Of course, there are state laws as well that come into play. And just a little bit by way of history, because there's an analog here with the cyber liability. So employment practices liability referring to the risk of claims that come out of the employer-employee relationship, including discrimination, harassment, wrongful termination, retaliation, and even things having to do with the wage and hour violations. Historically, my reference there to 1974 to 94 looks like an old reference. But what had happened is, and Tim mentioned that I've been in the business since 1996. At that point, employment practices liability insurance was kind of where cyber liability is today. It was relatively new. Relatively few companies had begun purchasing it, or it was on the uptick. And so the insurance marketplace had developed a product over time to address what was the rising litigation as a result of increasing labor laws and federal regulation. So prior to that, employment practices liability may have been, for larger companies, endorsed onto a directors and officers liability policy, but it was rarely bought. So it was a very limited basis before early 90s, and Chubb, which is a familiar name in our industry, first introduced their product in 1992, actually in response to the 1991 amendment to the Civil Rights Act. And that increased employment-related litigation and therefore the need for the coverage. So before the 90s, and people would often ask, well, isn't this covered under my general liability? And of course, it's not. A general liability policy responds to allegations of bodily injury or property damage. And so this is outside of that realm. There were coverage fights with carriers, but it was excluded, or it was not definitively included. And so in 91, with that amendment to the Federal Civil Rights Act, that provided for compensatory and punitive damages for intentional discrimination and unlawful harassment. And that significantly increased the liability for employers. In 92, as I said, Chubb was kind of first to the market with their product. And then as you go through the 90s, additional federal legislation that continued to pass only increased the exposure for employers. So that was the shift in coverage that happened. As I said, you reached a tipping point where before long, more people, more companies than not purchased employment practices liability, perhaps standalone now versus as a part of some other policy. And that's really where we are with cyber liability these days. So we click forward one more there, Rhett. Yep. So You all are well aware, especially if you're in HR, of the various complex web of federal and state laws that govern what the liability is or the exposure for employers. Title VII, certainly of the Civil Rights Act, and then Americans with Disability Act, Family and Medical Leave Act, age discrimination, Fair Labor Standards. I mean, it goes on and on and on. And so from the employer standpoint, the exposure is just greater and greater. Now, much like any of the ways that we interact with our clients in insurance, buying insurance, if you have a claim, is meant to indemnify you. It's going to supposedly put you back in the condition that you were before the claim. That's whether a building burns down or there's a product liability claim, or same for employment practices. But if you've ever been through a claim, it's usually a difficult process, and it's hard to ever be put back exactly like you were before. So our guidance to companies is always to engage in sound risk management to avoid having claims in the first place. And then, of course, if you do have claims, those can be a defense for you, even if a claim comes, to significantly decrease your exposure from a liability standpoint. So, Rhett, if you'll roll forward, when we talk about risk control strategies, before we even get to the insurance part, these are all things, again, for the HR people that will be very, very commonly noted. But in terms of hiring, effective hiring practices would be certainly at the top of the list for, in some parts of insurance, like in workers' compensation, we would refer to that oftentimes you hire a claim, meaning that it was simply a bad hire from the beginning, and it was just latent that something was likely to happen at some point. So within effective hiring, things like skills testing, specifically for the job function that the person is going to be entering into, personality assessments, just as one of several tools, again, to help ensure a right fit for the role, background checks, reference verification, all of those things will play into hopefully successfully avoiding claims and or providing a defense for claims should they arise. In terms of legal documents, at will employment agreements, so that if in fact there's anything that happens with the employee, they've been notified that their employment is at will, and that again provides you a defense, should a claim come from wrongful termination or something of that nature. Termination best practices. I think everyone certainly has long since been aware of that in terms of disciplinary procedures that you would undertake with an employee, that it's progressive, it's given to everyone without discrimination across the company, it's well documented, so that you avoid any kind of knee-jerk reactions to things that go on, and fire someone without previously having gone through the steps that you would apply to anyone in that situation. So documentation around the disciplinary actions that you take. And then that's around termination and employment. Around harassment, because employment practices liability insurance that we'll get to in a moment is concerned with discrimination and harassment. So around harassment prevention, things, of course, written policies, everything should be written, communicated at time of hire, reviewed on a regular basis thereafter, regular training that's given. Again, all of these are both sound risk management practices that help you avoid the claims and a defense when the claim may come. Confidential complaint procedures, having an avenue so that an employee, if they feel that their immediate boss is either discriminating against them or harassing them, of course, they can go to someone else in the chain of command confidentially to be able to take their complaint to someone. And then prompt investigations. It is really shocking in many cases to see, because we see a lot in our business, a lot of employment practices liability claims. And it is telling in many cases to see what wasn't done by the employer that was known about, either by a manager or by upper management, and was allowed to exist for an extended period of time without anyone investigating and taking any action once it was known. Now, of course, it goes without saying, in that case, that's going to provide damning evidence in the case of a claim. So prompt investigations, again, as a means of a risk management technique, is something that we always encourage. So if you roll forward there, and I want to touch on a couple of these. One more. Yep. Great. So I want to get to the employment practices liability insurance piece. So the policies themselves are meant to dovetail with the types of exposures that employers face legally from, as I said, federal labor law primarily, but also state laws. So the scope of coverage that would come into play is the first thing. So discrimination and harassment, retaliation, wrongful termination, the policy itself, just like all insurance policies, is a legal document. And so it's going to state both what is covered and what is not covered. It's not gray. It's a legal contract that will govern what happens when the claim comes. So it may also include, and I'll touch on this, employment practices liability, third-party coverage. So you think about the employer-employee relationship primarily, but you also could have third parties. You might have a vendor who comes onto the premises, customers who would be harassed by an employee of the company. So third-party coverage is broadly available for most companies, especially those where they're dealing with the public. So that's even more important that would be available. So harassment, discrimination, both by employees and third party, is available in the employment practices. A couple of things with regards to the employment practices liability insurance. If you think about insurance in general, it exists for what we would call fortuitous events. So things that are seen to be within the control of management that you could plan for, manage for, that you ought to have known about, are not the subject of insurance. In the case of employment practices liability, that comes into play with wage and hour claims. So there is not available in the marketplace anywhere coverage for damages related to a wage and hour claim, where someone's brought suit that they were not treated in the right category, has to do overtime, whether exempt, non-exempt. What is available are sublimits within the employment practices liability insurance for defense expenses only related to wage and hour claims. And even the addition of defense expenses was a later addition to those policies. And the most that's available typically would be $250,000, because you can do everything right and still get sued. If you've ever been through an employment practices claim or anything having to do with labor law, those are expensive. And so that sublimit to the overall limits is available simply to pay for the defense expenses around the claim. If in fact there's a judgment, the insurance is not available to pay that, because again, it's thought that, well, you could have known and managed that exposure, and it's not the subject appropriately of insurance. There are other exclusions that could come into play. There's no sense in going through all of them, having to do with Warren Act and other sorts of things. So it's very important when you're buying the policy that whoever is representing you would compare and contrast quotes from different carriers and look at what is excluded relative to what your business is actually doing, because that will obviously be very, very important. Let's see, Rhett, if you'll push forward one more. Yeah. So talking about coverage and options and policy details, I thought it might be helpful because we often get questions around, well, for my company, how do carriers look at me? What is it that they're considering when they're underwriting my company? And so in an application for employment practices liability insurance, you're going to find questions related to not only the size of the company, because headcount would be one of the primary drivers around the cost of the insurance. But on an application, they're going to ask how many full-time employees, how many part-time employees, where are the states where you have large concentrations of employees. So looking at what is the risk profile of your company? Is there a union shop? How many union employees are included? Do you use independent contractors? That, of course, over the last, gosh, it's been 10 to 15 years, has been a huge hot button, continues to be, around the use of independent contractors who may or may not appropriately be classified as independent contractors. And Department of Revenue has been on that because they're trying to protect lost tax dollars. So around independent contractors, they're going to want to know, do you use independent contractors? How many? They're going to look at the compensation levels of your employees. At what levels are your employees concentrated in below $50,000 annually, greater than $100,000 annually? Because again, from a risk profile, that would represent a higher risk for claims coming from there. They're going to ask about what's the turnover? What's your number, of employees who were involuntarily terminated this year, last year, and they're trying to get a feel of, well, what is the turnover? Because obviously that only increases the number of times that someone may allege that they were discriminated against. So trying to get an idea of what the risk profile is. Our human resource personnel, this is straight off the application, or employment counsel consulted prior to terminations. What are your practices relative to terminations? So if you have a stronger HR set of practices, you have labor law attorneys that you consult with, that's providing a stronger risk profile to the carriers. And then it's going to ask all the questions that I mentioned before about, do you have written guidelines, policies, and procedures related to employment at will, discrimination, sexual and other workplace harassment, equal employment opportunity, disabled employees, and reasonable accommodation? So all of the exact things that would provide for your ability to engage in sound risk management and claim avoidance at the beginning. That's the sort of thing that the carriers are looking to understand what you have in place. So after that, then of course the carrier, based on that risk profile and employee headcount, is going to derive a premium that they would charge you. Now, in terms of the risk profile, the size of the organization, that has to do with what deductible you may face in the employment practices policy. So on the smaller end of headcount, say under 100, typically somewhere in there, you may see employment practices liability deductibles per claim. So this would be a per claim deductible as low as $5,000. As you move up in headcount, 100, 200, 300, typically the carriers are going to begin to push those deductibles up so that you're responsible for a larger portion of any claim, so that you have more skin in the game. So size would determine both the premium typically, as well as the deductible that you may have to take in buying the insurance. Around the policy provision exclusions, what we are asked oftentimes is, well, if I'm sued, can we still use our attorney to defend the claim? And the answer really depends on what type of policy that you have. And there's no need to go into the detail, but what the carrier wants to know is that the legal counsel that's going to be defending you in a claim is a labor law attorney. They're not skilled in something else. They're not a real estate attorney that you have a good relationship with that wants to handle this EPL claim. So in many cases, it is quite possible that the carrier will agree to use the counsel of your choosing if in fact they're skilled in labor law, because the carrier, under most of the policies for the size, I think, of the companies we're talking about, does have the duty to defend you in the event of a claim. So if you've ever gone through this and you know that an employee would have to go through the EEOC, file the complaint, go through that process, then the EEOC at some point would issue a right to sue letter, which then sets the clock ticking on when they can bring the claim. The typical process may also go through arbitration, but the carrier wants to know that you're being represented by somebody who knows what they're doing in employment law, not somebody who's skilled in something else. I think Rhett mentioned earlier that many policies will have a small sublimit for cyber liability. You will also see that on some of your standard insurance policies. So you're buying your property, general liability, and you may see employment practices liability, and it may give definitively a $10,000 sublimit or a $25,000 sublimit. That, from the carrier standpoint, allows them to avoid coverage disputes, whereas they don't have to argue with you about whether or not it's covered. They've said, yes, it's covered, but here's the limit. And the limit is very small, and they've charged a premium. So in the grand scheme of all of their clients, that's a less expensive way for them to go about it than having to fight over whether a claim's covered or not. A $10,000 sublimit or $25,000 sublimit for an employment practices liability claim is very small. And I would argue that for most any business, that's too small, that it is worth your while to consider pursuing an option for a standalone employment practices liability insurance limit, which would typically start from most commercial insurers at $1 million. So that sublimit, because in defense expenses alone, you can very, very quickly get to $5,000, $10,000, $15,000 before you're anywhere near getting to a settlement or anywhere in a claim. So you may also see those small sublimits on some of your policies. And as well as being more limited in what they're offering in limits, the coverage is also not as broad. So another analogous between the cyber and the employment practices liability, when you have a true exposure, we feel it's always best to seek out specific coverage for that. If you had an environmental liability exposure, it's best to look for true coverage for environmental liability versus trying to tack it on to some other policy. The last thing or one of the last things I would say is that when you purchase cyber liability insurance from any of the larger carriers, and they're well-known names, the market is very large. This is now, some 30 years later, the employment practices liability insurance marketplace is a mature marketplace. Many carriers, names you would recognize, Travelers, Chubb, Liberty Mutual, Hartford, and many others that you would not recognize that are very, very reputable, that in almost all cases, they're going to offer, with the purchase of the insurance, a suite of services that come along with that, having to do with HR consulting, a hotline, some limited legal advice that you can get from them, handbooks, guidelines. So for a small business, that can be a particularly valuable part. And I think there's also an analog there back to the cyber side, because on the cyber liability, when you purchase cyber liability insurance, in order to get approved, they're going to go and look at your system, meaning Travelers, Chubb, any of the other carriers is going to look at your system to see, are there open ports somewhere, and they can easily breach some, firewall. And they're going to tell you that. And oftentimes you have to correct those things before you can get coverage. And then you're going to get monitoring on an ongoing basis. So you're getting some defense mechanisms built in with buying the insurance. Same thing on the employment practices liability. You will often have a suite of services that will come with that will help you to manage from an HR and somewhat of a legal standpoint and get advice on the HR and employment field. Let's see, if we can roll forward, I think, that's our last one. So I think if I would sum up on the employment practices liability side, that if in fact, I wouldn't even say for a size of a company, but if you're 50 employees or above, or 100 employees and above, somewhere in there, without question, it is worth the exercise of going through to go to the market, fill out an application, and see, okay, what is available in the marketplace for employment practices liability insurance. It simply is impossible to do everything right and avoid each and every claim. And a single claim, and some of you, may have been through it, can get very expensive very quick. And so the ability to have the purchase of insurance to put you back like you were before, or as close as you can get to it, we would say at this time, I would guess that upwards of 85 to 90% of all companies in the marketplace are purchasing employment practices liability insurance, and certainly at the 100, 150, 200 employee level and above, it would be even higher. The saturation point of what people are doing. So from a best practices standpoint of what your peers may be doing, it's certainly recommended without question. I know we want to leave some time for questions, so I'm going to stop and Tim kind of
No,
drive.
Mark, that was awesome. Yeah, we've got a bunch of questions. I wrote down 20, and then I'll read the ones that the folks actually put in the chat. So if I get through all those, I may jump on some of mine. But the first one, and I'll start off with EPLI. It says, what factors guide the premium that insurance carriers charge for EPLI insurance? And maybe just top three. I'm sure there's a lot of extenuating factors that they take into consideration.
Yeah. In all of insurance, carriers are applying their rating to what we call an exposure basis. And so in workers' compensation, that's payroll. In property, it is the building values and the business income values. In employment practices liability insurance, the exposure basis is headcount. It's number of employees. So as a core base exposure, it's going to be headcount. And then through the application process, they're testing to see what are your procedures, what are your HR guidelines, how sound are you with how you're conducting business, and that's going to guide a portion of the premium as well. So I would say it's the headcount. So it is without question that it's from a linear, it's not perfectly linear, but a company with 500 employees is going to be paying more for employment practices liability than somebody with 75 employees. The last thing would be your loss history. If in fact you have claims, then that's going to tend to push up the cost of the insurance in the future.
Gotcha. Awesome. Here's the next one. Same line. It says, can we still use our own attorney for a claim if we buy EPLI? And I think you might answer that in there, but if you'll just touch on it again.
Yeah. Yes, as long as it's not your cousin who does real estate closings on the side. It's so the policy will typically give the carrier the right to dictate who the counsel is, and they will have panel counsel that are usually the large national firms that you would recognize, like Jackson Lewis, that are well-known HR. However, and if your broker on the front end is doing a good job, and you say, hey, we want to use our legal counsel, they have an HR practice, they're real, here's our attorney that we use, he's long tenured in this field, and you make that known to the carrier, they in fact can approve that you would use your own attorney. What's usually going to come with that, though, is that the carrier has negotiated panel counsel rates with the Jackson Lewis and the big firms. So they're saying, all right, we'll use them, but that carrier's already agreed to their rates. So your counsel that you want to use, if they get approved, would have to agree to charge the panel counsel rates that the carrier dictates.
Okay. Yeah. This one's for Rhett. What is the underwriting criteria to get cyber insurance? Are there minimum security controls needed to get a policy?
Yeah, so the market right now is a buyer's market. So it's not as strict as it was a couple of years ago when the coverage was relatively new. With that said, there are general baselines of coverage or controls that carriers are looking to have in place from prospective clients and insureds. The top two, I think, are the MFA. So you log in and you have a text message sent to you or an application that you use that confirms that you are the person, as well as employee training. So you can have the best security in the world, but if Susie in accounting is still going to click a bad link, then that doesn't really do you very well. So the employee training piece would be A lot of it's formalized, but learning to pick up on cues in an email address or within an email body itself, or what a link looks like to learn what might be something malicious versus what's real. Carriers are also partnering with a ton of security vendors as well, kind of like Mark mentioned on the EPL side. So if you are struggling to implement some of those controls, a lot of the markets have agreements in place with certain vendors where, if you're a new customer to them, they can help you with this control and refer you to a software company or a training company that does that. And usually it's going to be at a discounted rate as well. So another advantage of partnering with an insurance carrier is they can kind of build with you your security posture if that's something you're looking to grow.
I had a little add on to that. I know we offer like learning management software, and I just got pinged this morning on going through a module about phishing scams. Now, for somebody like us, right, we hold very sensitive data, right? We've got direct deposit information, we've got healthcare information. Can you talk a little bit about how you coach folks on security versus workability? I guess I don't know if I'm saying that correctly, right? I think folks appreciate security levels sometimes, but sometimes, right, you're like, okay, this is the fourth hoop of fire I've had to jump through, right, to log in. Right, of course, you don't have those things, right? Then that question always gets asked,
Yeah, I think, it's a tough question to ask. It's annoying clicking through 3 different things of MFA, like, the carriers get it, the software vendors get it. The technology is getting better, especially with AI. They're able to do just single sign-in logins, and then they're able to protect once you're in from the back end, so you're not having to do that every time. So one, I'd say technology is getting a little bit more easy for that to happen, where maybe it's, like Face ID is a really good example. Like you can just hold your phone in front of you. You don't have to type in a password. You're good to go. Whereas 3 years ago, you're getting a text message and having to type in that number every time. So maybe exploring some technology. And I hate to be like, oh, buy a product, but I think the best thing to be is cautious, but aware of kind of what's going on. And I think training just comes with that. So just learning quick little cues to pick up on certain things, and being coachable from that aspect is probably the easiest low-hanging fruit. But yeah, and just the investment in technology. But it's kind of a double-edged sword. Technology is getting better for us as protecting our organizations, but it's also getting better where stuff is looking a lot more real. You hear deep fakes and voicemails that are all kinds of stuff that are getting through, and they're able to do with AI now. So it's a double-edged sword, but hopefully that answered your question a little bit.
Yeah, no, here's another great one, probably the one that most folks want to know. So our company gets a cyber attack, right? And we recognize the threat. What happens from your perspective? Let's say I'm insured with Scott Insurance, and I call you and I say, hey, we've identified this. What do we do next, and how does that claims process work?
Yeah, great question. So cyber claims would, big picture, operate like any other claim that you've got, whether that be a fire or a slip and fall from a worker going to your workers' comp. The difference with cyber is they're a little bit, obviously they're niche, but the speed that you need to react is going to be a lot quicker than an employee that slips and falls and has a back injury that's a long tail, right? So if you log into work on Monday and you don't have there's a black screen of death and you can't work, like you can't make money, that's significant. So the process on our side would look the same. We would intake the claim, take the phone call, figure out what's happening, connect you with the claims adjuster at the carrier. The great thing about having that standalone policy, that like what Mark mentioned for EPLI, is they've got specific cyber breach counsel, investigators. So what that claims person would then do is get you in contact immediately with each person at each different level that you would want to talk to. So the initial conversation would be with breach counsel, as well as a forensic investigator, to figure out what's happening, broad picture, like what is going on in the network, how deep is it, how wide is it, what's being impacted, and then getting a game plan with you as the business on how to best move forward. Are you totally shut down? Can you operate in a segregated environment? And just figuring out the nuts and bolts of the claim. And then from there, it would be, you working with breach counsel. They do a lot of negotiations. So sometimes they'll bring in negotiators to negotiate if it's a ransom claim with the threat actors. So, hey, do you want to negotiate with them? Do you want to say no and not pay? So figuring out the strategy with breach counsel is also a part of that. I've actually sat in on a couple of the calls and the negotiations, which was a really cool experience. But these lawyers and law firms that are doing these negotiations at ransomware, they work with these people. They see the same names often, so they don't build a relationship, but they know how they operate, right? They know, hey, the third time this specific group gets pushed back and lowballed, then they'll break and they'll come off the original demand. So having that expertise is really valuable as well. But just working through that, and then once the claim's closed, let's say you're fully back operational, on the back end of that claim would be some deploying resources from a control perspective on can we improve, can we remediate what happened, is there technology to improve our system based on what we saw here, how did this happen, we've got this security software that we can deploy in this environment that's going to prevent that from happening again. So the claims process would go through the very beginning stage all the way to helping you improve on the back end, and all the if it's a good coverage, a lot of that is going to be taken care of within the policy limits outside of the retention.
I'm curious, when you guys make those policies, I'm sure most of these demands for ransom, they want cryptocurrency. I'm guessing probably 90% of the times. How does that work? Do you write the policy and the company, if they decide to pay, goes out on the open market, I guess, buys the crypto and then pays it, or how does all that work?
Yeah, so that would be at liberty to whoever's handling that claim. And yeah, it's almost exclusively cryptocurrency. Like Colonial Pipeline, I think it was 75 Bitcoin, which was like $4 million at the time. So it's almost exclusively going to be a cryptocurrency, and part of that deployment of resources would be doing the exchange and stuff on your behalf. So whoever's handling the claim, the breach counsel or the ransom negotiator, they're going to be doing that on your behalf. It's a very niche coverage too that's included in cyber policies, but to that there's exchange fees and rates and things like that go into it. So if you agree to the ransom and then it takes 24 hours to process and there's a difference in that what coverage of that difference would also be picked up. Just a very nuanced coverage thing that I wanted to mention. But yeah, the breach counsel, ransom negotiators would be responsible for handling all that on your behalf. But they would work with you on what you're comfortable with. We've got clients and insureds that are like, hey, we are not negotiating with them. They are awful people doing awful things, like full stop, we'll figure it out. And like, amazing, great for them. That's the FBI's recommendation is to do that. But it's tough to do that with a manufacturing facility. You can't produce product and you've got employees sitting on the side not getting paid. So, but yeah, that's the long way to answer that question.
Okay. Hey, Mark, I had a question on the workers' comp side. When you guys write workers' comp policies, can you talk about just the process you go through with an employer when somebody calls you and says, whatever, I'm in the state pool, I really want to get out, or, I've had a lot of claims. How does all that work when you go in there? And do you guys do like the preventative stuff, looking at what they're doing to bring their mod factors down, so on and so forth?
Yeah, that's the analog I mentioned earlier that, we hope that our clients, we can put them in a position to buy less insurance because we're going to help them build a better risk performance organization. And whether that relates to cyber protection, HR, employment practices, or the more traditional realms of insurance, I say more traditional, that's what we think of as workers' comp, liability, auto. So same set of things where we would enter into any particular company, learn their operations to know, well, what is it you have to do every day when you wake up to successfully run your business and execute, and what are the risks inherent in that from a worker safety? And those range the gamut if you're in retail or distribution or wholesale or manufacturing. And so it's really a matter of getting to know them. And we have an entire group of people, which is called our risk performance group, that will help them build a better risk performance culture. And so in workers' compensation, whatever may be needed in their environment to do that. And it is about a culture. You know, it's not just compliance. There are some compliance things, OSHA's out there, but it's really more about performance. And that has to do with culture and leadership. And that's the type of conversations that we have with people. And if it's even so poor that they've had to go into a state pool, that's just kind of the insurer of last resort, believe it or not, and the comp market actually is soft and has been soft for a while now, meaning very competitive, more of a buyer's market. So there are players out there that for the right people that are trying to do the right thing, that have the right procedures and are building a culture, they will take a risk out of there and write them at competitive rates. So yes, same thing. We're going to partner with them to do what's necessary to help them, you know, build that safety culture and deliver better results for their own company, you know, to the bottom line.
Awesome. Well, I think we have some more questions, but I know we are out of time. I know everybody has busy schedules, so I just want to thank you guys for coming on today. You know, we try to do these once a quarter, very enlightening on the cyber side, the EPLI side as well too. If you have any questions, you know, we're gonna send the slide deck out. We do have a recording of the call today. If you have any additional questions, please send them to us. We could forward those on to Mark and Rhett, but just want to thank you guys for being on the call today and hope everybody has a great day.
Thank you, Tim.
I'll see you guys. Thanks, Rhett. Thanks, Mark. Bye-bye.